Hey, what's up, everybody? This is Lasagna Cat. Um, Semper is around, but I'm going to be doing the meeting admin for the most part today. But Semper's definitely in the house. Welcome, welcome. We're going to go over some finding your way stuff. You know, this might be week 9 or 10 of finding your way. I'm not really too sure which one. We're going to look at Dell's recaps. I've got some recaps for later on. I did Finding Your Way, last spring. And I've got a couple little recaps I want to show that I'm looking forward to showing you guys, fielding any questions. Um, without further ado, Dell, are you ready or do you need a moment or two?
No, I'm ready.
All right, right on. Yeah, so go ahead and grab screen share. I believe it's available and we'll get going.
All right. So let me know if you guys can see the screen.
Yep, looks good.
All right. So like I said, usually Mondays I don't take a trade, but I'm gonna start off this trade that from Thursday that actually got me twice. As far as going red. Let me see if where's the so basically at first when this drop happened, I missed the whole thing. So waited for the fair value gap and everything. Um, I usually like to wait for bigger fair value gaps because I'm figuring this is going to be a better play because it's more liquidity and stuff.
Yeah.
So I actually got in here at the bottom part of this fair value gap, and I wanted my exit to be on the top part of this fair value gap. So it started coming up, and I had my stop actually right here on the top. So it started going down, and I was like, all right, great, this play is going to work out. I'm good to go. But as you see, it came right back up, stopped me out.
Mm.
So I'm like, okay, so no problem. I'm just going to wait. And already this created a green fair value gap at this time. So I said, okay, I'm just going to wait and see what ends up happening because already right now, as this is going, this trend line started. So when this fair value gap joined, even though, again, this is where I broke rule number one, wait for bigger fair value gaps. This small one here that came up, I said, you know what? I'm going to try to replay the play.
Ah, right.
So I got in right here, which worked fine, started going. And again, target was going to be right over here. This time I set my stop up here because I didn't want to get stopped out.
Mm.
Now, train of thought, oh, it's going to work out because I felt confident. So I got, I think, two to three, no, three contracts because again, I just lost one. So what ended up happening, it never hit. Then it went all the way back, not only passed, but hit my target, my profit stop. I mean, my stop loss. And then after, luckily, even though it did hit it here, because I should have took a screenshot after, this is where the market just shot right up. So that already just left me red with a bad taste in my mouth. So I was like, you know what, that's it. I'm good because mind you, this was Thursday, and Wednesday was like even worse. It took a couple of trades. Okay. Took a couple of trades here. Let's remove this. So same thing here. Sorry. Same thing here. Got into the trade, green fair value gap, everything looked great. Market started going up. And I was saying to myself, all right, it broke this trend, so it's gonna actually work out. And this was a wick line that I drew out. So I was gonna give myself some time because again, I've been doing, not feeling good with the market with the way everything was going. And it started going up because I got in over around here when it started mounting at 10 SMA. So it started going up, and I'm like, all right, great, the play is going to work out. Little would behold, it came back and stopped me out. So that was one loss. I'm like, okay, it's fine. We're going to take a reset and we're going to do this over. So now this was actually a play that did work out.
Hey Dale,
Because yes,
when you're getting into your plays, do you ever evaluate the longer time frame? like 30-minute or hour?
Not all the time. I usually, because remember this time I was on the 1 minute. I usually at this time on Tuesday, I really wasn't. I did check the 5 minute, and I'm like, because there was a green fair value gap, but then also I was confident on the wick. I was waiting for the play to play out to get above the wick, and wanted to wait to see if a fair value gap pointed out because we were in an uptrend. But like that was my thought process.
Yeah, because I've noticed like a couple times this week when I was using the fair value gap, um I would look at the 30-minute and the 15 and the 5, and one time the 5-minute didn't have a fair value gap, but the 15 and the 30 did, that lined up. The 15-minute overlapped the 30-minute fair value gap, and I was like, oh shit, this is going to be a strong level. So I got in and it actually helped out. So maybe looking at the longer time frames will kind of help you out before like making your final decision, you know what I'm saying?
Got you. Okay. Yeah, because I'm gonna have to start doing that. Like I said, because me and the 1 minute, yeah, no, we don't work out. But this play, like I said, actually worked out. Still on the 1 minute going short. Um, and I think with even though this work did work out, I didn't like the mindset because again, it was going, we were in an uptrend, even though the market started going down. I was hesitant because everything was just kind of going against me. So when I saw this, I actually caught the play right here, because it was still below the 10 SMA. We had, reaching down to the zero, the MACD was showing good. The RSI was definitely showing divergence and was definitely under the 50. So that's why I really wanted to wait for that confirmation before trying to get into anything in. And I didn't get a chance to get in on this play. So when I saw these two, I decided to get in and I was able to actually close out. And that was the one successful play that I think I had probably for that day. And what was the other one? There was another one. No, I didn't take a play. This was Monday. Yeah, I think that was mainly it. Because this one was actually what screwed me over because I had the Apex. I think when I caught the contracts, that's what actually blew up the account when it went up to this type of point right here. Because I already lost up here and then getting 3 contracts down here and it reversing, this blew up the account. So that was the trades. And then after that, I really wasn't trying to touch any buttons. Well, no, there was one actually, this trade that didn't work out also. Right today, actually, after. Yep, this was it. Did I mention this one or no?
Nah.
Okay, this was today's play where I waited for the market to show short, waited for the one bounce, came back, fair value gap. I didn't get stopped out because I did move my profit up, but then it started going down. And as you can see, the market hasn't gone down ever since. It's been going up ever since. And luckily I was in profit, so I was able to stop out. But like I said, everything that I knew that I thought was going to work out, basically beside that one play, did not work out.
Yeah, it's a tough week. And I see you're on the 1 minute again. Yeah.
Yeah, like I said, you would think I would learn my lesson, but yeah, no.
Oh, yeah, I hear you. Well, I mean, you know, good reinforcement for like, to stay with your strengths and all that.
And
Um,
that's the thing, yeah, because once it started working against me, like I said, it's just fearful to press the button because you don't know what's going to
yeah,
end up happening.
yeah,
You want to take it, but then at the same time, you're like, no, it's not. You get all these questions, all these doubts, all these things. And I'm like, yeah, no, I'm not doing that. Okay,
yeah,
I won't do that. So
right. I mean, when I came back to the market a couple weeks ago, the thing that really streamlined my focus was I was like, all right, I'm just gonna stick to what I really know, you know, because it was for the first time in like many weeks that like I felt like, hey, I'm in the right mindset to trade. But like, I'm coming back to this, the market is what the market is, you know, it'll it'll chew you up and spit you out. So I was like, all right, I know my A plus set up like the back of my hand. I'm just gonna play A plus, you know. And
Yeah.
and it's like and my A plus isn't like it's not a sure win. It's definitely a high probability win. And like, man, like just sticking with the A plus is just like, you know, it's not what I'm gonna do. Like I'm not just gonna like play this one play forever. But when it came to like me trying to find my feet on the ground, it's like if you want to be reminded that the market is a place that you can succeed, stick with the A plus, like stick with what you really know, and like
Yeah.
and it will play out, like it will play out well, you know. And it's funny, and it's like, you know, this, and it's also market context. It's like, yeah, the no one's setup is going to work well in all contexts, and these are crazy, you know, these are crazy FOMO weeks, you know, these Momo 500, you know, 500 S&P plus today. It's
Yeah. Yeah.
yeah,
And one thing, I think I'm gonna change my A plus in a way to tweak it, because like I said, I've been watching the video, and when you watch it, you know, if anybody gets a chance to watch it, if you notice in every fair value gap play, like I said, I don't know if you guys remember, if you look at recaps, I'm always getting in at the bottom part, or even if it's green, I'm getting in here. But
right.
what I've learned is that actually the best place to actually try to even get in on a fair, because of the would be at the bottom part. Like, so if I'm playing a red fair value gap, instead of waiting to get here, my best option would be to actually, for anything, would to be get in actually over here.
It's kind of like waiting for a gap fill, kind of.
Correct. You know, like, because what ends up happening, because that's really the A setup, because this is becoming more of resistance.
Yeah.
So if it does form because of this candle and it comes down, and it has to, and I've noticed, and I've been watching it, and most of the candles do retrace back to the bottom part of their value gap. Either be green or red, that's where it actually starts to hit, and then it confirms, because if it hits here and it starts consolidating, even if I get into this play, I can use this wick, maybe a tick or two behind, as a stop loss.
Hmm.
But when I've looked at other like my pictures, like any other ones that I've done, it never, if it does play out, it never really, if either it doesn't touch, if it does touch, it doesn't go beyond it. Like you see this one, this green right here.
Yeah, it's perfect.
It comes up, it comes back down, it consolidates, but it never breaks the
Hmm.
bottom part. So
Yeah.
that would have been a perfect entry and actually to go in long, you know, and so I've been noticing that. So I think that's how I'm going to start to work my plays from here on out.
Yeah.
Just to try to see if that's gonna be that grade A setup, like even right here. It comes, even though I got in and but this would have been better, because now, even though this still didn't work out because I didn't hit, I still would have been able to, I wouldn't have lost so much, because again, I got in on the top part where basically the move already could have happened,
Yeah.
and stuff like that nature. So it's still, my A setup still needs to be a little tweaking to really become an A setup. So
Yeah,
the more videos that I watch, the more things that I learn, I think I can be able to tweak it a little better.
for sure. Hey, could you
Hey,
show that last slide again? I just got a quick question about it.
Which one? This one?
The one with that nice long setup at the bottom of that green fair value gap. Uh, the last one you showed that had the where you showed the yeah, yeah,
This one right here.
there.
Okay.
Yeah. So right there. So watching it consolidate at the bottom of that fair value gap, what other catalyst would be in place that would give you confirmation to enter there, just in case it just does a falling knife? Like, you know, how do you play that but not play it as a falling knife?
Well, at the time, if I did, I probably would have used the 50. I would have
Hmm.
used the RSI because it's above the 50, but then depending, I would have probably just used the squeeze, because there's so much green here.
Yeah,
And mind you, there's so much green, but then there's all this red.
right.
So that would have probably told me like, hey, you know what, I may be due for a bounce. And once we got started, you know, if I got in over here, because this is where I probably, once I've seen this touch like a few times, I probably would have looked down and seen that, okay, we're above the 50. When we're definitely, even though it's closing, I think there's so much green here that I probably would have been able to get in, because I'm like, there's green, but then we're coming down.
Yeah. Yeah.
So that would have probably gave me confirmation. But like I said, if I had to play this, my stop would have been probably most likely in between here. So like I said, if I'm tweaking the A plus, it would have been a few below this wick.
Yeah. And you know what I'm saying? I'm seeing those two dojis to the left of it too. So just like close under those dojis and then, forget about it, after that,
Yeah.
Yeah, that's cool.
Because I would want to wait for confirmation, because again, normally I would play it where it would sit. I don't think I played this long, but I would have waited till it sat right on top of the 10 SMA,
Yeah.
and then probably would have took it long, like making this more of a confirmation.
Yeah, because there's a
But
falling wedge breakout right there too, which would line up with
yeah,
that 10, mounting the 10. That's cool.
but if anything, but I didn't play that long.
Yeah.
That was my week. Yay.
Hey Dell, just like Lasagna Cat said, is just since you've barely going through this and you're barely starting, or not barely, but you're starting to perfect this strategy.
Mhm.
If you try to only trade your grade A setup, that's when you're gonna have the biggest success, and the most consistency. When you try to deviate from that or try to be a B setup or a C setup, just know that the probability is going down for you if you are trying to use a B or a C grade setup. And that's why I always used to tell Easy was, hey, trade your grade A setup first so you could have you're like almost guaranteed a cushion, right? And then after that, if you don't see a play, try to get try to trade your B or your C setup, but just be aware that you might give some money back. But if you consistently only trade your grade A setup, you're gonna end up in the winning side a lot more than you think, and that's just gonna make your confidence grow. And not only that, but when you start trading your B and your C setup, that's when you kind of get back into the habit of forcing a trade when you shouldn't be forcing a trade. And this is something that I was going to tell Luna is I know that Luna's not near the computer when the plays happen, but try to figure out, okay, I know I have a second job or I have a second business and stuff like that. Figure out a time slot that this is something that ICT I learned from is they have their kill zones, right? So if the play doesn't develop on the kill zone, they won't trade it until the next kill zone. So that's what I was gonna tell Luna is like, hey, figure out a 2 hour window or a 3 hour window when your play sets up at least once or twice. If you take one trade, your grade A setup once with 2 to maybe 4 contracts, you you're gonna hit your daily goal. Like on your first or second trade, you're gonna hit your daily goal. And that's what you wanna get in the habit is okay. I see my grade A setup from 5:30 to 7:30 in the morning. If it doesn't develop, then I'll wait until 10:30 or 11 o'clock or whatever the time frame is, right? And then look for that setup. So like that, you don't have to be glued to the TV and just watching paint dry from when Euro closes to power hour. Because that's when it's slow moving, but the market's setting up for the next move. And the ICT model, they always say that the Asian opens, right? So the Asian sets the bar when it opens at 6 p.m. Pacific Standard Time. When the Asian market starts, they set the bar, right? And then once the Euro opens, the bar that the Asian market set, freaking the Euro session takes takes out the Asian session. It takes out their bar, and then the Euro sets the bar, And then there's another time slot when the New York session starts in the pre-market, when they open up pre-market for New York, then the New York time session takes out the freaking Euro session. And then we know that when the Euro closes at 8:30 my time, Pacific Standard Time, 10:30 Central, then the US is gonna take out the Euro closing, where they set the bar. So there's always gonna be windows, especially with futures. You have like 3 or 4 windows in the 23-hour period where you can trade at least one grade A setup. So you should at least be able to trade 3 times total for your grade A all day. Whether it's in the morning, you trade for 5, 10, 15 minutes, and then come back in the afternoon and trade again, and then come back at night. But at like the last 3 weeks, I've noticed the after hours, there's been a lot of action only because the last 2 weeks have been data weeks or earnings week. So whenever it's earnings week or like a big data week, I highly recommend you play after hours, because like the last 2 weeks, I got to like half of my daily goal or a third of it in the after hours. And I know people got work and got kids and life, but there's always going to be a little window. And if you start seeing the characteristics of that market or that window, it'll be to your advantage.
No, I definitely check out the aftermarket. Usually, because after class, when I'm home, dinner time and bedtime. And by the time I do wake up, the first thing, like I said, I try to get my mind straight. I just run to the gym like 6 in the morning. And by the time I'm back, that's when I try to get my day started. But I'll try to fit in to leave it, just even if I could just look at it, not even trade it, just look and just get that,
Yeah. Yeah,
that
exactly.
screen time,
If you could just take a look at it just to see how it's setting up. So like that, when you wake up the next morning, you're like, oh, perfect. It did what I said it was going to do. Now I can look for my play.
Yeah, I'll definitely do that. Cool. Thank you.
Hey, Samper, can you hear me?
Yeah, I got you.
Luna!
Hey, how are you guys? Sorry, I'm late today to come in.
How you doing?
Good, how are you guys?
Very good.
Been very, very busy. I just had as well some offers to deal with. So, work sometimes takes precedence over learning. What can you do? So I just missed the information about the Asian. So when you're saying about the Asian market sets the bar, so that's 6 p.m. and then you've got the euro at 3 takes over. So what do you mean by it takes over the Asian? What does that mean? Like, does it take that? So let's say the Asian market is uptrend, and does it come down and at the euro and the euro picks up euro at euro time? Like, can you explain a little bit?
Yeah,
More
well,
about that?
like the way the ICT explains it is the Asian market sets the bar first because that's the first market to open, right? But the Asian market is gonna set, since it's a small market, it's gonna set a high and a low.
Okay.
So when the euro market opens, it's either gonna take out the low or it's either gonna take out the high. So they're
Okay.
gonna set the bar, right? But you have to look at, okay, so here's my high of the Asian market, here's the low of the Asian market. Where's price action? Where is price action when the euro market opens? Is it towards
Gotcha.
the high or is it towards the low? If it's towards the low, then know that it's probably gonna take out the low, and the euro market is gonna set a new low, and then it's gonna reverse to probably try to take out the high of the Asian market. If it doesn't take out the high of the Asian market, it's gonna come close to it, And guess what? When the New York, that now price action's at the high of the Asian market and the Euro's open, right? So the price action is so close to that high that when the New York market opens, it's going to be easy for the New York market to take out that high because price action's already close to that high.
I see.
And
I
then
see.
and then the New York is going to take out that high, set a new high, and then it might reverse to the euro low. Remember, when the euro closes, that's when Brandon always says, "Hey, that they're switching off the algos for the euro market. Now the New York algos are going to take over, and it's either going to keep going up because it takes out the high, right? Or it's going to reverse all the way down to the low and then probably bounce up from
Okay,
the low."
so basically, we can take then the highs and the lows of the Asian and Euro market because obviously I trade New York time. So we can take those times, highs and lows, as kind of resistance and support areas, right?
Yes. Yep.
Okay.
Yep.
Okay,
So
got you.
pay just like ICT, they use trading view to mark out the high and the low of each market.
Okay. Okay, got you. The other thing is, I didn't hear everything you were saying before. I just recently got in. Basically, with the setup, sometimes it's hard to catch it, and I do have very limited time to trade. I love to trade in the morning, so New York opening time is perfect for me between 8 and 11. The question is sometimes it's very hectic and it's hard to catch that cross properly because sometimes it just goes down and continues, right? Doesn't come back the price action. Is it possible to have like multiple strategies, or we should just go with one strategy? Like I see Dell, I think that's using the fair value. Is it totally separate, or can I choose if I cannot catch that? I'm finding very difficult for me to catch the cross signal unless there is another signal that I can use. For example, with instead of the 1050, I can use, let's say, 1000 or 200. Does it work with them as well? Because sometimes I notice it comes back to it and that goes up. So is this coincidence, or is this something, another strategy
It
that?
does work. It does work with the other moving averages, but just think that those are longer time frame moving averages.
Okay.
Like the 100 EMA has 100 days worth of info, and the 200 has 200 days of worth of info. And you might not get those crosses. You might get those crosses less than the 1050 cross because the 50 is the fastest first to cross, right?
Yes, but
And then
sometimes with
and
this
I know you're
average.
not catching them all the time, but I said this earlier in the week where you need to master one system first. And I
Okay.
don't want to get you overwhelmed with all these systems because there's a lot of new traders that get caught in the habit of like, oh man, this system's not working. Let me go try a different system. And then they figure that system doesn't work. And then they try another system. And then it's like, it's not that the system doesn't work. And that's what I hate about all these, or I don't like all these supposed traders that expose ICT or expose all these other guys, right? They're not exposing anything. Like I said, all the strategies line up. It's just what helps you see the chart the clearest. What lets you identify the price action? What makes you identify the support and resistance levels? And for everybody, it's going to be different.
Okay.
But I've come to realize that they all line up together. Yeah, there might be a lot of plays in the fair value gap system because you see a bunch of those lines, but not every play is going to be a grade A setup.
I agree. Yeah. So
And that's why I was trying to tell you, like, if you can't trade, like, you have to find the best window for your time because I know you work.
yeah.
So if you really want to trade, you're going to have to make a window for you to trade and just concentrate on trading. If real estate or your business is getting in the way, then don't even trade that day. You're like, let me take the
Okay.
day off. the market will be there tomorrow. There was, like I was telling Dell, ICT is good because they have kill zones, right? They have from 10 a.m. to 11 a.m. They look for a kill zone. So that means that a place should set up between 10 a.m. Eastern time and 11 a.m. And if it doesn't set up, guess what? They're not trading it.
Okay, how do you define a kill zone? What is a kill zone?
That you would have to go. I'll send it to you, but
Okay,
there's different kill zones that ICT has identified. Like
okay,
there's one in the morning on from 8:30 to about 9:30. So
okay,
these are just times that the action moves. So these
okay,
little windows have where there might be a fair value gap strategy that'll play out. But just
okay,
like it plays out for fair value gap, there's gonna be a window for a moving average setup. Like
okay,
5:30 Pacific Standard Time or 8:30 your time, there's gonna be a play. There's
okay.
gonna be a play before that or maybe after that.
Yeah, I noticed that actually, but most of the time when these guys go online, like Brandon and I'm sorry, what's his name?
Connor.
Connor, yeah. So basically by 8:30 I see, oh, we're green so much. So and this is pre-market. So it seems like it's a good time as well.
Yes.
So yeah, I don't
Yeah,
mind.
lately the plays have been after hours. Like I told the team before you got on, is after hours, especially during data week
Mhm.
or earnings week. There's a lot of plays going on. It doesn't move as slow as it normally does when there's nothing going on.
Yeah, it kind of boils my blood, that aftermarket. I just can't stand it because it takes so long.
Yeah, it does. It
Yeah.
does, but honestly, the aftermarket, it used to bore the fuck out of me. But guess what? When I started trading ES and futures, I could narrate and just call all out all my plays nice and slow in the after hours. So like that, when the market opened and it moves way
Okay.
faster, be like, okay, there's my move. I can get in, without even without a doubt.
Okay.
That's why I always recommend new traders. Yeah, it's boring. The candles are small. The freaking price action's like almost flat.
Hmm.
But during data weeks and during earnings week, that it moves a lot faster, and you can catch plays after hours. Get a 3 or 4 $500 cushion. So like that, the next morning you can have a little cushion and have a bigger stop loss.
Okay. The other thing is if you are using those top step or these
Prop firms.
yeah, prop funds, these have always trailing stops. So basically you can't play long plays. So if you do that, then your account is blown like no tomorrow.
Top
Uh,
Step doesn't have a trailing stop. They just have a day max loss limit.
okay, okay.
So
Well,
if you don't want to do the trailing stop like with Apex,
mhm.
I'm not sure if Top Step is available in Canada. I'm not 100% sure, but I
Um,
know they don't have a trailing stop. They just have a hard stop of 2,500 or 3,000
yeah,
or whatever
like
whatever
currently
packs you
I
do.
have Apex and I just have it to get the data and everything, and so I
Mm-hmm.
can have that simulation
Yeah, practice.
a practice account, and so I have them, and they do have trailing, so it will blow your account very fast. I hear it all the time.
Yep.
Yeah, so at the end, maybe you can, if you do a long play, you're positive 1500, but in reality, if you use you actually will be your account is blown, although
Yeah.
you're positive in the simulator, right?
Mm-hmm.
So that's something to keep in mind. So if I can do the same strategy that I'm using with the other indicators like the 100 SMA or EMA or the 200, I see few opportunities like that, especially because right now the movements are crazy.
Yeah.
With the pricing. So sometimes those lines are, they're there. They cross them, and there's opportunity. But I don't take it because I'm only taking 1050, and that takes time, because by the time that it comes back, sometimes it's very steep, and then the RSI is not in the right spot, right?
Mm-hmm.
Yeah. So just that's the what's happening with me. I just wanted to share it.
Yeah, what you want to do, like I said, you want to identify the best window for you to trade without any distractions.
Yes.
I will teach you the other stuff because there's plays like the 1050 cross, right? And then there's a 50-100 cross. That's a golden cross. That's the golden cross is it's like a continuation play.
Okay.
And then there's other crosses that I use. I just didn't want to overwhelm you with all these crosses because your brain's gonna be all over the place. So if you can just perfect one, then I can
I can move
slowly
different.
add other stuff to you to your
Okay.
setup.
Okay. No problem.
But like I said, we can try to do the fair value gap. It's totally up to you, but you're gonna reset the learning. You know what I'm saying? Because you're gonna have to learn the 50. I mean the fair value gap.
Yeah, of course. I would like to learn it. Well, regardless whether I continue with the 1050, I want to learn everything. Like not only
Yeah,
one.
definitely.
Yeah.
Like I said earlier in the week, I said master one and then slowly add other ones. And I
Okay.
told the group earlier today when the fair value gap lines up with the 50 SMA
Mhm.
and it lines up with the volume profile, that's strong support right there. So it's gonna pop. It's gonna pop harder than a normal pop.
Okay.
So a lot of the strategies line up. And when they line up, it's a lot stronger. It's like an extra confirmation of okay, it's gonna pop up right here.
Okay, I'm gonna change the trading time because 9, like most of the time I start around 9 o'clock and to 11 kind of thing, and the movement are just insane.
Yeah, you already missed it.
Yeah, I already missed it. So I'll try the morning. It's I think it's softer and more reasonable than the crazy algos that go on and shoots up and down like crazy.
Yep.
Yeah, I'll try that next week and see how that works out.
Yeah, try that out. And like I said, they're like 5:30, 8:30 your time. The plays are already happening. Like maybe like 8 o'clock your time. Start because the play's gonna set up for the 8:30 move.
Okay. And with that, I should be looking at the Asian market and
The euro.
Euro
At that
market. Sorry,
it's a
Euro
euro.
market. 3
Yeah.
o'clock, 3 a.m. start the Euro. Okay.
Yep.
So the Asian market will become irrelevant at 8 o'clock in the morning. We have to look
Yep.
at the Euro up and down. Okay.
Exactly.
Okay. No problem. So I'll test that and see what happens.
Yeah, test it out. Let me see where it goes, and then the reason why Dell, also the other reason why Dell kind of uses the moving average and other stuff is because Dell's been with us for a while, so he kind of knows the fundamentals of those strategies already. It just the fair value gap helped him up his game, help him like perfect his game. For you, you came in fresh, you didn't know anything, so that's why I want to learn. I want to teach you the fundamentals.
Yeah.
The
Okay.
fundamentals. Once you got the fundamentals down, we can throw other stuff at you. Because as a new trader, you're just gonna get overwhelmed, and you're gonna be like, "Well, 10% the cross and the fair value gap," and then you're gonna be like, "Well, which one do I use?" You're gonna
I
confuse
agree.
yourself, and I don't want you to be confused. I want you to be like, "Okay, the 10, the 50 cross, it lines up with the fair value gap. Okay, I'm getting in, or whatever it is, right?"
Okay.
But I don't want to confuse you and just get you lost.
Yeah. To be honest with you, sometimes I do look at different screens, and there are some channels and everything. I think I'm gonna turn off that screen. I'm just gonna put in front of me the indicators, which is the 1050 and like the one that you set up for me, and I'm just gonna go master the 1050 My issue is entry. I'm always entering late, and the second challenge is, do I continue or stop? Where do I stop? So do I put just? I know you told me with ES just to put 5 and 6, but I sometimes I see it going farther. So do I stop and let go and done, or do I leave it? That's not
Well, the first I wanted to get you used to catching 5 to 6 points, right? Once
okay.
you get multiple contracts, you'll lock in 50 or 75% at the 5 or 6 points and let the rest run.
Okay, so do I use I'm using right now the NQ, not the ES.
Mhm.
Should I, because I noticed that you are always guys talk about the NQ. Should I go back to ES or just continue? It will work with NQ, but
It
then
will
just
work. It will work with both, but it was a lot easier for me to learn on ES
okay
because
because it's
they both
slower.
have different characteristics. Even though, like I said, sometimes ES leads, sometimes NQ leads, sometimes NQ likes to do a fresh low more than ES. You know, they have
Okay,
different characteristics, and you have to identify those characteristics because they're both a little different. Like NQ will pass certain levels or pass certain moving averages a little bit. Then
hmm
ES tags those levels and then bounces, where NQ will smash through that level and then bounce. So
Oh,
those
I
are
see.
just little things that you have to pay attention to. It's like, oh, okay, NQ likes to trap the bulls or trap the shorts by going past that level, trap them, and then squeeze back up. Where ES likes to tag that level or even shy that level and then bounce.
Okay, so you suggest that I go back to ES and just do ES and for now until I get the entry right.
Yes.
Okay,
Let's perfect
I'll
your
do that.
entries. Don't
Okay,
chase. Definitely do not chase. If it goes like four ticks, four ticks above your desired entry, I would just let it go.
okay,
You don't want to
I'll
get
do
in the
that.
habit of chasing because if you chase, and it goes right against you the next candle, you're gonna be like, fuck, what did I chase? And then your emotions start to get in the way.
I agree. I agree.
Yeah.
Okay, so I will do that, and then I'll keep 5, 6, 2 contracts, 5, 6. That's it, right?
Yep.
Okay,
Yep.
I'll do that until we master this. Hopefully, then we can move to the next step.
Yep.
Yeah, chasing is death. And one thing that might help, because chasing is every, that's like, chasing is like what the market wants to trick noobs to do. Like one of the top three things I feel like it wants to trick the rookie traders into do is chasing. If I ever find myself if I ever find myself in the spot where I have allowed myself to chase a trade, I will imagine where I would get out if I had caught the bottom. And sometimes, especially with NQ, because NQ loves to bust through the highs over and over again, I can get like a 4 point win, even chasing. But it's never worth the risk reward of even to the bottom of the low of the candle that you chased. You know what I mean? I don't know if you find yourself chasing, maybe that wisdom of what I learned from getting burnt chasing so much might help.
I totally
Just get
agree.
out. Yeah,
I totally agree.
get out where you would if you had caught the bottom.
Yeah, I sometimes I did this the chasing game in the past, and the second I enter, it goes on, and then okay, I'm not gonna take it. It's just too late, and then it goes back up, and then okay, then I question myself, should I get in? And then it goes up, and then finally, when you get in, it immediately drops down,
Yep.
10 points on you, and then you're screwed. You can so
Yep.
it's just crazy. Yeah.
That's exactly what they want. That's what they want. I mean, the market, I mean, I'm no expert, but they want to, they get in, they pump, and then right when retail's pumping, that's when they dump it on retail because there's nobody left to pump except for the people they want to screw over. It's not even they want to screw it over. It's like the market is algorithms competing against algorithms. So it's one giant competition. And in one giant competition, the easiest people to feast on are going to be the lowest skill.
Yeah.
Well,
So
it's the ones that are the most emotional.
yeah,
If you can control your emotions, you will be that much ahead of the game. It's when your emotions get in the way that you're like, oh fuck, it's gonna continue going up. I'm gonna get in. Next candle goes against you. You're like, man, I shouldn't have got in. And it's like, no, you need to be like, okay, you gotta identify that level. Okay, here's a moving average that it might come hit to. If it doesn't hit, or if it does hit, where is my optimal entry? And then stick to it. Whether it's a volume profile, Luna, keep learning those volume profiles. I will teach you volume profiles that will help you with your entries.
Okay. I did read a little bit about it, but I just didn't have a chance last week. It was just swamped. Like I just it's
I'll send
crazy.
some videos on some volume profiles because I think it's better just to, for sure, look at the volume profile from Brandon if you haven't. From the YouTube, he has a volume profile. That right there has a bunch of good nuggets in it about how to use, how to use limit walls and how to like gauge all that stuff. That video alone freaking helped me 10 times get better. And there's another guy who only uses volume profiles that is pretty damn good too. So I took a little bit of his information that he gave me, and it's
Is it
freaking amazing how those levels work.
is that Dale or something, some trader Dale or something like this?
Yeah, Trader Dale. There's another guy that Pete the Cat sent me, and he's pretty good too.
Yeah.
But definitely the volume profile game is laser to the freaking T, especially when you line it up with your own strategy. If you
Okay.
can have those stack up together, it's like reading a freaking children's book. Like literally, your chart reading skills will go freaking up like no other.
Like I did see the video. I think for the trader Dale, I did not understand the time zone that I have to use for the volume profile. Like he identified top and bottom and the POC, but when do you use it and how long? Is it from 9:30 to, is it the last half an hour? Is it last hour? Because you can use any time zone. He
You
even had
can, but just use the fundamentals of the strategy. You know what I'm saying? Like go
Mhm.
watch the Brandon's volume profile video and then watch those other videos.
Where is that on the, is it on our account Discord?
No,
So
it's on YouTube. Just go to
oh,
TG33 YouTube.
okay.
I'll probably repost it on the futures chat.
Okay, perfect. Thank you.
So you guys can easily access it, and then I'll post the other videos. And when you watch these videos or when you're learning, this is something that I learned while I was learning all these strategies for you guys, is don't take in the videos with a grain of salt, right? You're only gonna take the tips or the tricks that they use that complement your strategy. You don't want to like, okay, I'm gonna follow Brandon's strategy, and then you go watch this other YouTube guy's strategy, and they're both talking about volume profile, but they're totally different strategies, right? And then
Mhm.
you're like confused. Don't do that.
Okay.
What I found works for me is, all right, I'm gonna go look at our elite strategy and how BRT uses our strategies, whatever strategy is anchor VWAP, standard dev, volume profile, RSI, MACD. I got the fundamentals from Brandon, right? And then I go look at all these other videos. And this goes for when I post videos. Don't change your strategy. Take what they use and look for parts and tips and tricks that they use that complement Brandon's strategy. Don't try to like completely change the strategy. Just take out bits and pieces. of their other people's strategy that will help you get better with Brandon's strategy or with
Sounds
the
good.
BRT strategy.
Okay, we'll do.
Hopefully that makes sense.
It does. It does. I mean,
Um,
let's say if you have that POC line and you have um, the like it's an indicator that's gonna be probably bouncing from there or something like this, and then the cross happens, it gives you more confidence, right?
Yep. Yep.
Yeah.
Yep. Cool. Luna or Dell, do you want to share, or Lasagna Cat, do you want to share your recaps or?
Yeah, I got two recaps here that I'd like to share with the group. I think that'd be cool. Um, and I'll let you guys know why I want to share these particular two. Let's get my screenshots going. I could do three, but it's these two that I really want to share. Because I had some really nice trades this week. Um, trading the good old A plus. Um, so let me stop yapping and I'll get my little just preparing my screen here. All right, right on. Okay, I'll do the screen share and the timestamp. Multitasking. That you guys. All right, sweet. All right, you guys. So I'm gonna do my recaps here. Let me just share the screen. Dur. Crazy. Got how to use a computer. Can you guys see a TOS chart up there?
I just see black.
Oh, really? Shoot, I think I did it wrong. Ah, Um, okay, share. I do see blue.
Yeah, I got you.
Okay, here we go. All right, right on. Okay, cool. All right, so this first one I want to share is from Tuesday. And the reason I chose this one is because I mentioned that I'm coming back to trading after a couple of kind of some tumultuous weeks in my personal life. So heading back into trading, doing the A plus setup. So I just want to show you this first one from Tuesday because it really exemplifies the A plus. So I gotta have my moving average stack. It's the 50 SMA here, 100 EMA, 200 SMA, 666 SMA. And so yeah, it was really good. I opened up my platform and I saw it setting up. Um, this is how it looked when it was setting up right here. So when I opened up my plat, I saw that it had done this nice like little double bottom, and then it hit that bottom again, and it had made this higher low right here. And I said, "Oh shit, we're at support. We made a higher low." I noticed that the moving averages were stacked the way I liked. And I looked at RSI, just like Semper said, you know, first thing you do, right, is you look at the price action, you look at where your support is. For me, I look for also SPY had hit support, I forget where. And I saw that my moving averages were stacked the way I wanted them. And then came in here and looked down at RSI. RSI was putting in higher lows right here from overcool. So we had two higher lows already, and we were getting our MACD cross. My entry was here on this candle. The MACD cross looked really good. The reason I entered on that candle was because I wanted this would have been a great entry right here after that first higher low, but then I wanted to see but I hadn't looked at everything at that point. You know, even if you see like your A plus, you need to look around and make sure it's your A plus. You need to kind of look at the greater context. Just because I see a high or low at support, it doesn't mean that it's going to be a reliable A plus setup. I got to make sure that the moving averages are set up right. I got to make sure that the indicators look good. I got to make sure I have a good thesis for going long. Before I entered the trade, one of the things that I noticed was that there was, let me show you this. This is really cool. I noticed that there is a 1 minute gap all the way up here. See that back there? This was where I saw a trade setting up. I'm sorry, I keep jumping around from the screenshots, but it's off of the same one. So it's like, here was this is where I saw my trade setting up. Right here was where my mouse is. But I noticed way over here, there is a 1 minute gap on ES. And those gaps always fill. Brandon mentioned that a lot recently. He mentioned it once last week. So when I was looking at this trade, I was like, holy shit, there's a little gap up here. I'm seeing my A plus setup, all the usual earmarks of it, and I'm seeing this indication that a long move is imminent because this gap must fill. So I'm like, oh shit, that's fucking awesome. So by the time I had ascertained all that, I was good to go on this entry. Now it's a bit high. You know, I'm not that crazy about how high it was, but that really didn't matter that much to me. I thought the thesis to go long was really, really good. So I was like, yep, it's A plus, let's do it. And this wasn't this somewhat lateness of this isn't because it was like I hesitated. I just needed to see certain things. And you know, it pulled back and held the 10, which was great. And this entry here is one tick above the body of the candle that held the 10. So that's totally legit. That implies a little bit of momentum just to add to the certainty. So yeah, entered here, smashed up into here, nice 200 moving average. So it's just kind of stair stepping at this point. It's a nice consolidation here. And then it whipped up here. My profit take was, you know, my target rather was the 666. The 1 minute gap on ES was more like up here. All right, it was up here. Like the 666 is here. The gap was more like up here where this consolidation is. But for me, the play is to the 666. I used that ES gap just as evidence that a long play was imminent because I had to fill. But for me, the target is the 666. And in my typical fashion, I take some profits a little bit before the target. This time I was a little too conservative. You know, right around here would have been great if I took it here, which is still fine to me because like I played my A plus really, really good in this instance. And like I said, coming back to like trading with a clear mind, it was like, well, how do you do this? You know, stick with the A plus. And I wanted to show you guys this one because it was a great example of my A plus setup. And also this nugget, you know, we talk about these little nuggets of wisdom that we get taught here. And these ES 1 minute gaps are powerful magnets. You know, this play is usually played as 666, but it magneted to gap fill. ES 1 minute gap, fucking awesome. And I used that same nugget to do a really nice pre-market trade. What was it, yesterday? And right after I did it, Brandon posted that video where he did the exact same trade. And I was so fucking excited because like the stuff that he teaches and the stuff that Semper teaches, we put it into practice and we do a great trade. And then we go look at what they did and they did the exact same trade. And not only that, they made a YouTube video about it, like to teach people this stuff because it's so fucking good and useful and like it's reliable, good stuff. I didn't prepare a what you call it, a recap of that trade, but whatever. But anyway, this is a good one. So there's that. Any questions or comments? Want to kill me? Anything? No. Right.
Yeah, so I actually missed so I usually wait for the 10 to cross the 50, and usually it feels too late. So other than was the gap the number one indicator here for your setup?
Oh, that gap target?
Yeah.
No,
So it
that
sound
was that was mainly like a big confidence builder that a faraway target was imminent. What that told me was like you see over here in the top right hand corner. This is a little sliver of an ES chart. So those two little yellow lines there, that's the gap. It was like all the way to the left, and here's the 666 down here. I was kind of like, it's almost certainly going to magnet to that gap, which means that my play to the 666 ought to be a piece of cake.
What are you doing? What are you doing?
It was just like a big confidence builder. The main
Dude.
thing that made me want to enter this trade, and yeah, it would be awesome if those 10 over 50 crosses could happen earlier sometimes. But it was the higher lows in price action with RSI higher lows and a MACD cross at support, and the fact that it had done like these two supports like this
Yeah.
and it came back was really made me want. And in fact, it's funny about stock characteristics. This is actually an ES chart because like I wanted to show the 1 minute gap because the 1 minute gaps actually don't print on MES. You have to be looking. It doesn't even print on all futures charts. It's only on MES. Like it's funny. I'm sorry, it's only an ES. If you see an ES chart with a 1 minute gap and then you look at an MES chart, there's probably just going to be a little gray doji there. There's not going to be a gap most likely.
Mm.
So yes,
So
Okay.
your yellow is your 10 and your orange is your 50.
oh, I'll show you a little closer. It's let me zoom in a little bit. Right here. So the blue is my 10.
Oh, the blue is the 10. Okay.
Yeah, and the pink is the 50. So like 1050 cross didn't happen till up here.
Yeah.
Um, and so this entry isn't based on these small moving average crosses.
Because if you really look at this will be an ideal shorting the spot for like you're waiting for it because it crossed the 50 and then the price action went back. The price is downwards, the RSI is low. But it went the price action went up, not down. So that's a
Oh, you mean because like, oh, let me see if I follow. So yeah, so right here where my cursor is, where my mouse is, it did the 10 under 50 cross, right?
right.
And
That
it pulled back here.
right. So you'd expect it to go down and continue. It's like a good setup for a short.
I
Yeah,
totally see what you mean. I totally see
yeah,
what you mean. You see,
yeah.
but like when I played that, what I saw was and it's so funny that you say
No.
that because now that you bring that up, it makes me look at the chart pretty different. But I guess all I can say is like how I was seeing it, like personally, like was the fact that the support was so strong. Um,
Mhm.
and the fact that there was what do you call it? The
The RSI exposes it.
Yeah, the
That's
R
that's
side does expose it, and it's
yeah.
the funny thing is like um you see it's almost touching the 50 underneath here, and it's
Yeah.
almost touching the 50 underneath here, and often when that happens, that implies that it'll like hit its head and go down, but
Mhm.
they're not quite touching. Like there's
Yeah.
something inconsistent happening.
Yeah.
Um,
And the MACD, the same thing, is getting on the upper side. So uh, the price action is doing something, but the actual RSI and the MACD is kind of exposing
yeah,
it's a scam.
and that's
Well, it's saying that it's getting strength to go up because you see the higher lows on RSI, and then you get the MACD cross right before, right before Lasagna Cat gets in,
Yeah.
and that's usually because Lasagna Cat used to do the second leg entry, so that looks like a second leg entry to me.
yeah, it's
But
exactly
I'm
what
not
it is.
sure if you use that.
Yeah, it's exactly what I was using. Yeah. Because it's like
Good.
it would have been a great trade down here to do the first leg entry, 100%. But and I often will take that trade, but at that time I hadn't looked around enough to make me feel like it was really it. Um, the book that I'm reading right now talks a lot about how traders like are like, oh, check it out, like bull flag entry, like I see the triangle forming, like let's get in. and then the trade goes against them. And it's like, oh, but I thought it was a bull flag. But it's like, because like, okay, yeah, price action is showing a bull flag, but you got to look around and see what the market context is doing. And
Yep.
I've been that guy so many times, and I only do the mock crying voice because I'm making fun of my own self every every single time. I was like, but I thought it was I thought it was playing the pullback, but but the thing was, is like the market context is a big thing. It's like when you mentioned the 10 under 50 cross, that's often a good short entry. The thing that my main plus is based on a lot is that it has to happen after like a sell-off, So I was getting in, after a sell-off like this, the 10 under 50 doesn't look like a bearish signal much to me. It's not something I really noticed because like look at how much it's sold off. And sure, it could keep
Yeah.
going down, it could keep going down. But
Yeah.
when you combine the fact that it was such a big sell-off, also with uh, with the fact that that RSI was showing the beginnings of strength with the higher lows, then at that point, the fact that the 10's under the 50 over here, you don't think of that as short because it was huge dump. And then the A plus moving average spread that I was talking about, which was the way the moving averages are stacked, which signals like potential for reversal. This A plus stack is something that Semper taught me a long time ago, like last spring, and it's a good look for a reversal. So when I was down here, I was looking for something that would go like that high up. So it's like huge dump. Look for all the cool stuff we were talking about down here, then for a reversal.
Yeah.
So that's kind of why the 10 under 50 and other things don't make it look like a short to me over there. Um, and
What's that?
and believe me, like I've played so many higher lows where I'm like, okay, this is my A plus, and then it goes against me,
Mhm.
and it's because of that thing where I didn't stop for a while and look around and really check the context of what's been going on. It's like there's been times I've traded where the market's been going up and then it makes like a new little low and it does a higher low and then it enter, it goes against me. But it's because I didn't read the context. I was like in the middle of a range or something, and I was trying to play the middle of a range like it was a reversal, you know,
Mhm.
and so you gotta look around. But that was a good example of my A plus. I'm stoked about it. I don't know.
What is that stack?
Oh yeah, all right. Let's go back here. I'll show you that.
I actually haven't. I don't think I've learned.
All right, I think my it's right here, but I've got all these fib lines in the way. Let me see if I have a cleaner photo of one.
Yeah, I just can't tell. I know the 10. I think we also. Do you use Dash? I'll just let you go over it.
Yeah, okay, so you can actually see it better on this ES.
What?
I'll just zoom in a little bit.
You want water? I don't have water.
There we go. This shows
Hold
it.
on, I'll give you some water right now.
So what this stack is, so it's the 666 SMA. There's a lot of lines here, so I'll just break down the ones that are important to this
Mhm.
question. The 666 way up at top, SMA. The 200 SMA beneath it. The 100 EMA, which is the little mint colored one. And the 50 SMA, the solid pink one, not the dash pink one, the solid.
Mhm.
Yeah, so it's 666 SMA yellow, 200 SMA purple, 100 EMA mint, 50 SMA pink solid. And
And when you see that, oh, were you? When you see that, that's when you like to go looking for a price action reversal all the way towards the 666. So you're thinking it's going to bust right through the 550 SMA, 100 EMA, 200 SMA, and then tag the 666 because it's
yes,
too far away.
it's like a stair-stepping thing. And sometimes it'll
Yeah.
only go to the 200. Sometimes it'll need to go to 200 and like consolidate and do like another dip down and like do stuff. It depends on also like where other factors are. but yeah, this plays out to the 666 really frequently.
Hey, Toad,
Okay. Yes.
usually when the 666 and the 200 SMAs are about 15 to 20 points apart, spread apart. So like if you were to put a price on the yellow line down to its 200, and they're about a 15 to 20, maybe even max 25-point spread. When it's at 25-point spread, it's most likely potentially going to have a reversal pop to close that gap and start going up.
Does that pointage can't translate into NQ, right? It must be way more.
Yeah, on NQ it's way more. I haven't got that down, but with ES
Okay.
it's between 15 right now I think with NQ it's between 40 and 60.
Okay. I'll end up taking a look at that on NQ for you because I like NQ way more. I almost don't even want to touch ES half the time. I did that.
Go sit over there.
I don't know what it is. So I'm gonna take a look at that. I'll look for it on ES and maybe I can figure out what it translates to on NQ. Maybe I'll look at today for an example.
Yeah, that was one of the characteristics that I started noticing is like, oh shit, every time the 666 and the 200 are about 15 to 20 points apart, there's a big pop. But that's signaling, okay, so I look at the spread between the 666 and the 200 and let's say it's at 20 points. Then I'm looking at price action to either base like how Lasagna Cats is, see how it
Yeah.
based 3 times and it
Yep.
created like a support. Then I'm looking for that. And then I'm looking at RSI. Okay, is there higher lows on RSI? And if there's a divergence, because remember, it's the price action is flat, but RSI is showing higher lows. So then that tells me in my head, okay, it's building up strength for a big pop back up.
Yep, that makes sense. I see the higher lows there too. Yeah, all the way at that one. Yeah, you can see them on the inverse, what looks like an inverse cup too, kind of building.
Yep. Mm-hmm.
Is all the way on the left. That first
Right there.
that first pump green candle on the arrow, yeah, that one. The RSI is so low, and then the next one it's higher, even though price actually came lower. So it's a bit of divergence, and then there it's about the same low, but whatever. But price was even lower, and RSI still did not
Yep.
go lower. That's fantastic, and a
That's
lot of people might
exactly.
even see that.
Hey,
Yeah, go ahead.
Toad, that's exactly what you want to identify because what's the market like to do? It likes to trap, right? So what did it do on that last dump before Lasagna Cat got in? It trapped the shorts by creating a fresh low. And that's what you call a fresh low breakout.
Yeah.
Yep, right there. That's
Okay.
a fresh low breakout. And you'll see it time and time again. It's like, okay, it's setting up for a fresh low breakout. And the way you identified it, you just identified it. The RSI, even though price action did a fresh low, RSI still created a higher low.
Yeah.
So you're on point. You just got to put it all together now.
Yeah, thank you. Yeah, I love it. I actually even almost like sometimes, I don't know, maybe I'll grab an opinion. I don't know if it's a little crazy. Sometimes I like catching the fresh low to try to nab the absolute bottom with a tight stop. A
And you
little
can,
nuts.
like, I tested out the 30-minute BPR and I did that. And it fucking worked like a charm. 3 times. 3 times I tested it. It was 100% success rate this time.
Yeah.
I'm not saying that it's going to be 100% every time, but so far, a 30-minute BPR balanced price range has landed me 20 to 30 points. All because the
Yeah, I've
RSI
noticed.
showed itself.
Yeah, when I see those, one day you had 10 NQ running for, it was like 14 points. I was like, holy hell. Like
I've
one
slowly
day.
built up and accumulated my account size. So
Yeah, no,
I
100%.
started with two NQs, right? And I slowly built up.
Yeah, that's actually what I'm gonna do. I went and I blew PAs overconfidently, being like, no, this is gonna bounce. And then so now I'm gonna start using only I'm gonna try to do 2 MNQ so I can have a runner.
Yep.
Uh
You could do 4, like 2 to 4 MNQ. You should be able to pass your PA account within 2 weeks.
yeah, definitely. Yeah, that's the goal. And no rush. I don't care if these
Yeah, don't
things
rush it.
take
I was about to say, do not
months.
rush it. Just, hey, take it slow, dude. You got 30 days, to pass.
100%. I mean, I've already actually repassed the evaluations I made to replace those PAs. I actually passed them today. Today was awesome. Lots of fib action.
Hell yeah.
Um,
Let's go.
yeah, for sure. Like it was great. And now I just got to take it slow. I don't care if it takes me 2 months to get the payout. I will not be wasting these PA fees again. Because the risk reward is like 1 to 9 on a prop firm account if you get the payout, but every time you got to replace them, that 1 to 9 gets dwindled.
Yeah. Yeah, get your money back. Let's get the payout so you can get all the fees back.
100%. My first purchases, I'm gonna get the the actual. I've like using ChatGPT kind of
Yeah.
makeshifted some of the BRT indicators, but I want to get the actual like the daily one that makes that beautiful like dynamic band that
Yep.
Connor and Brandon show. I
Mhm.
love that, but I don't even know how to start getting GPT to code it. So we get those in a duel up, but I digress.
Yeah.
Yeah, so you do catch it sometimes with the BPR. I want to try that
Yeah.
sometimes. I'm gonna try that out. But thanks for the answer on the moving averages stack. I just took some notes on that.
Oh yeah, that's fantastic. Yeah, no worries. I wasn't going to share this next slide, this next recap, but it's on topic. It's because of the stuff we're talking about. It's another trade that I took this week, and it's got the same moving average stack. It's like the 666, the yellow one, estimate is up here somewhere, but it's above the slide. But so it's 666 up at the top, and then 200 SMA, 100 EMA, and then 50 SMA. And here works. It was another reversal play. And I also just wanted to show you this one real quick because look at RSI again. It makes this low right here on the left, and the RSI dips into overcool. And then it does this. It comes down like so much lower, but then the RSI doesn't go any lower. In fact, I think it's a tiny bit higher than that last one even. And that's when it starts bubbling up, and you can't see, but the MACD crossed down here. So all the same stuff worked again.
And this is the same stack.
Yeah, it's the same stack for sure. Yeah. It's just that you can't see the 666 because it's like higher up off of the
Okay.
screen. Yeah. And you see, and it's like RSI, or price action made this low and RSI was down here. And it makes this much lower low. And RSI like isn't even as low as it was before. It's a little bit higher.
Yeah.
I didn't get in over here because I didn't see any true higher lows. I was being like real picky. But I was like, all right, when it comes down to the 50 SMA, I'll get it. I ended up getting on the 50 EMA, but here's the tried and true 50 SMA tag, and it went up very smoothly. So,
Yeah.
sort of another,
Awesome.
yeah,
Thank you so much. I've been sitting here wondering for days. I'm like, everyone, talking about the A plus setup, trade the A plus setup only. And I'm
yeah,
like, what? I'm like, I haven't. I'm to a fault at the moment discretionary where like
right.
that's why I was asking you Semper about what your number 1, 2, and 3 and your breakdown there really helps because I was like I need to put this into a piece of paper so I can just look at it and it'll really fix a lot of the inconfidence because I've been thinking price action MACD RSI like 100% the Fibonacci's the moving averages but I need to really truly systemize it because right now discretion I don't think discretion is very good but
That's a key, Toad. That's a key, bud. Where you create
yeah
a system, whether it's exactly like mine or your own, whatever helps you like read the chart. So mine is price action, indicator, RSI, MACD, volume profile, right? That's my
Yeah,
order. Yours can be whatever mix, but not only
I like that.
systematizing, but you're going to need rules, right? And rules like posted on the futures chat are Lasagna Cat's rules. Lasagna Cat's rules where he's talking about like, okay, the daily bias or intraday bias, the market conditions, and then he has rules for his setup. So you have to create rules for your setup, whatever you're
Yeah,
using. Create those rules, drill them into your head, and once you already know them, you're just talking to yourself in your brain,
yep.
talking to yourself, walking yourself. I talk out loud. My wife thinks I'm crazy sometimes, but I'm like, all right, price action is gonna go here. It's gonna bounce here. This is what I want to see, right? What do I want to see? You always want to ask yourself, what do I want to see from the chart or from price action? I want to see it down. I want to see it come down and hit the 50 SMA before I'm even thinking of anything else. I want to see that first signal first. And you might have different signals, you might have multiple signals, but you want to
Right.
see one signal that will like give you a clue to start looking at the RSI, give you another clue. Once the RSI gives you that second clue, is you get another clue, right? And then once you have three clues stacked up, you're like, okay, now it's identifying itself that it might pop or it might dump. And then you're
Hmm.
like, I'm getting in at this level once you identified that level.
Hmm. Makes sense. And I like the priority setup. You like price action is always king. Um, and indicators and then the volume. The one thing I'm not good at is reading the live volume, like the actual volume bars like you have there above your Mac. I'm not good at reading that. I sometimes I don't understand it to the point that I look at it and I think it's bullshit, and I'm like, this is not there must be something to read here because people value the volume highly. But like right there, those two seller beat candles, really. I'd be like, oh, that's the indication that some selling is coming in. But then nope. I guess because of the lack of follow through.
I mean, it's really fun.
And
It's like you'd probably get a bunch of different answers to that because, like for me, it seems very inconsistent as well. Like when I was in this trade, like I was going along here and I wanted to take my profits up here, ended up taking profits there. But when I saw this, right, I was like, you know, for one thing, when my trade started going up, I was like, yeah, look at the fucking volume beat there, it beat everything before it. I was like, yeah, look at this one beat everything before it, yeah. And then these two came and I was like, what? But
yeah,
then I didn't really pay it too much mind because I was like, look at how weird the candles are. It's these two
yeah,
wicks back to back. I was like, I'm just going to consider that as a market brain fart. Like, I don't even know what the fuck that is.
yeah,
But at the same time, my interpretation of that, how reliable does that even sound? It's just what I decided to feel about it at that moment.
yeah,
I mean,
100%.
the original volume system where that Brandon showed us about measuring volume beats and consolidation, I believe does work. It's just that it's about identifying where the consolidation is. Like, so here's a heavy consolidation zone, and the move went up. Buyers did end up winning. And this is actually where my little interpretation about this weird market volume fart actually turned out to be pretty true. Because like it looked funny. It was like zip zip. Like what is that? Looks like bullshit. So I disregarded it. And you see down here, the greens were stacking up, and they were the size they were. This red didn't beat it. These two greens are small. This red did beat it, but then
Yeah.
this green beat them all. And then
Mm.
nothing beat that green, and it ended up going up. So in a consolidation area, if you're able to like zone in on where that specific consolidation really begins and ends, you can use that system.
Yeah.
Like if I had allowed these to influence me, then it wouldn't have been. But these, maybe because of the way I look at it, maybe others would agree, maybe not. I just thought because of that candling, they didn't matter, and that I should start looking here.
Mhm.
And I wasn't even in the trade at that point, you know. I mean, well, I used that evidence to keep me into the trade up until that point. If I had wanted to enter in again at this 50, I would have still seen that volume look good. But yeah, I mean, I hear what you mean about the volume because it looks fucking crazy all the time and something.
Yeah, and it
Looks like
might be a little tinfoil hatty, but I feel like the volume, especially if you don't use an ultimate volume system that actually splits it between buying and selling. But
Mhm.
even then, without a footprint chart, you can't see what is just a stop order.
Yeah,
And so it's like I feel like the volume is one of the easiest things to manipulate, where like I mean, you had these two big red candles on those two weird wicks, high wicks,
yeah,
but then way less green volume totally crushed it. I actually noticed that yesterday watching the pre-market, there was a huge, like I mean, the post market at like I think like 8 p.m. or something, there was a huge red candle dump. And
right.
then all of a sudden, like 1/10 of the green volume just reclaimed half the candle.
Yeah, yeah,
And that's why I feel like it's very easy for really algorithms to manipulate it through like high frequency trading.
yeah.
But
Well, hey,
that might be tinfoil hat. I might not know what I'm talking about. Well, they do manipulate the market. I mean, they have the power to through their
I mean, yeah, could be, but I would say, take a screenshot of your trades and we'll all look at the volume together and see if we can like make sense of it because, um, it's with no indicator being 100%, blah blah blah. I think there's a lot of value in this one, and I think it's to just like be able to identify which candles matter and which ones don't. Like,
We should ask that for to Brandon because I know that he only uses the volume beat system in the consolidation zone.
yeah,
But
Mm.
where does that consolidation zone start? You know what I'm
yeah,
saying?
yeah, and
Oh, and
so.
that's like what you were saying.
And so yeah, so exactly, and so Semper with this volume area here, my interpretation was like I wasn't scared of these two big reds because these two candles looked so weird, like they just looked out
Yeah.
of place. So evaluating this consolidation and looking at the greens there, the greens consistently beat out. It's just that you have to kind of like know which not know, but have sort of a system that's reliable because we can't know. We could just have reliable systems.
Well, the system that I kind of use is I always look to the left. If there's a big candle down to the left, kind of like there is right here,
Hmm.
then there's going to be sellers there. So there's going to be a pullback there,
Yeah.
right? The bigger the candle, the more sellers are going to be there. So just like over here, there's a big green candle. And guess what? I would expect the pop around that area. And look what happened right here.
Yeah.
It popped. So always look left and look for big candles to see if there's potential buyers or sellers there. And like I said, right here is where these wicks, they're drawing. What the heck? These wicks right here were caused by these sellers right here.
Hmm.
So you know that there's going to be a pullback, and then you ask yourself, okay, where's a reasonable pullback to? Okay, the 50 SMA, the 10 SMA, is there a volume profile level there? Is there a weekly or a daily level there that it can come back and catch support? And if there is, then expect the pullback to go to that level. And then that level is your over under, right? That support level would be over under. So if it loses that and the candle opens and closes below that level, then it's weak. But if it holds that level, then it's strong.
That makes sense.
Oh yeah, absolutely. It's funny that that area you pointed out back here, Semper, that squeeze point, that was the squeeze point for this big spike in pre-market. And that's like that was this point here. That's why I made these lines. It was something I had my eye on while I was managing this trade. Um, let's see. Because I knew that area was the decision point. Like this squeeze point here was going to come into play here. Like if it could get strength here, it would make it up to my target. Like my target was roughly this orange line. And it came close here a couple times too. And every time I saw it get above, I was like, shit, man, once it gets above this thing, for real, it's going to start screaming. The only thing I didn't anticipate was that it took a while for it to like screw around before it started screaming. Cause like, check it out. What's the rest of these? Cause this is that same area. Like this is when I took my trade. I'll explain some of this other stuff. This is where I got in. This is where I got out. When I was in the trade, I was like, well, as soon as we get a couple candles above this area, it's just going to start, you know, wiling out, like going for 500, going for this, going for whatever. And like, but it took some chopping around. But, you know, like Semper pointed out, there were, you know, there's buyers there, like big time. So what really played out with that zone was when it pulled back later on. It pulled right back. So I wrote squeeze point continued because here's where the squeeze happened. And here's where price action came in and picked up all those buyers and then looked wild. So I was a bit confused during my trade, like, hey, why the fuck isn't my squeeze point working out cleanly? You know, I don't like this. But you know, in due time. So yeah, this trade was from today. And so this trade I played a little bit sloppily. It didn't have the A plus moving average stack that I usually rely on. It sort of had the 666 was on the bottom, which is great support, so I don't shy away from it. I just need to make sure it's setting up correctly. So you know, I saw it, it was a nice dump out in the morning, you know, after this nice big squeeze, and it dumped out here. And I was like, all right, we can get some support and maybe a higher low. And so after it put in this higher low, I got in kind of late, not out of hesitation, but just because I wanted to look around my charts and see if this thing was real, or it could be real. And you know, I ascertained that it did look like a good look, and I had in mind that it's probably going to run to 500 today. And so the fib pulled back. My entry was really high. Wasn't too stoked about that, but I thought it looked really like a good setup. And and I wasn't too worried about it coming down. Like you see, it came down here, right? And on these fib plays, it'll often come down and create a new low beneath the initial higher low. And yeah, when this happened, I was like, ah, fuck, I want to look at this shit. This isn't something I was happy about. But when I saw that I got a doji close above it and a candle open, I was like, okay, it's definitely going to work. Like at that point, I was like, literally, it's definitely going to work. So I've seen this happen so many times where like the fib looks good after the first higher low, awesome. And then so many times, and at around the 100, fib, it'll come back down and do like I don't know what you call it, you know, a new low within the fib, sort of like a little bear trap or something to shake out the longs before the real move, you know.
Yeah.
So it's like, a nice higher low, you draw your fib, and then there's a trap. A trap happens. And I've seen it so many times that I was like, even when I got in, I was like, all right, be ready for the trap. Even if I got the best entry possible, like right here, I'd be like, okay, looks great, but also keep in mind the trap.
Right.
I prefer a clean fucking play. But at the same time, if this happens, it doesn't weird me out too much. And I wanted this shit to happen more cleanly too. And like my profit take over here wasn't so clean. I could have basically gotten out of here and had the same same play. But whatever, it was good. The TA was real good. And if I'd been playing later on in the day, I would have checked out the squeeze point again. I don't know, set an alert. Yeah, if there's a really good squeeze point, like mark out the level and set an alert. So it might come into it again and evaluate for a play. Yeah. Shit. Yeah, so those are the two that I really wanted to share. And then that other one that I showed you real quick. Any questions about this one?
No, that makes sense. You know, one thing that might even that I started doing that you said if you took profits there at the previous squeeze up, it would have been the same play,
Yeah.
is to even grab like a four, like, you know, 3 or 4 contracts, whatever and then just recycle most of it and just keep one for the total final runner. Like
Yeah,
when it got up there, even just drop them, and then on those two nasty candles, the weird wick ones, just reload them.
yeah.
But that's more like that's probably mentally exhausting, probably.
I don't think so. I think it actually is pretty reasonable because you know, as long as you keep in mind, as long as you're lining up the indicators that justify getting in again, yeah, absolutely. You know, like let's say take profits here, and it comes down here, but then you're like, yeah, you know, MACD's crossed, our size above the 50, you know, no sign of slowing down. You know,
Nope.
maybe you look at these two and you're like, yeah, these two are probably fucking bullshit. Let's see if volume keeps stacking up pretty good. Yeah, I don't see any. Yeah, there wouldn't be nothing wrong with that at all. In fact, I think that would be the savvy thing to do. You know, but you make a good point also because trading does sort of like exhaust your mind and like, you know, and if you're not ready to make another play, just like, yeah, you know, stay
Mhm.
out. Like I was actually I probably could have been like, hey, let's see what happens if it pulls down here again. But at that moment, I was kind of just like, yeah, I'm fucking done. Like, you know, I held through a bunch of shit when I could have just done this, or
Right.
you know, like,
Yeah.
you know, these making 5, 10 or more points, you know, 3, 4, 6, 7 points, I don't know, 10, whatever. Like it's all gonna happen many, many, many more times. So it's like,
Yeah, I think Semper said base hits feed the family, and that's
yeah, yeah,
true.
absolutely. Moneyball, just like
Uh,
the movie. Great movie. Love it.
yeah. Also, I had a question. So this is today. So those three huge 1 minute candles in the pre-market are that CPI quote quote revision. Um, do you put much credence to? So I actually fibbed out that 5 minute candle, the whole 5 minute. Um, and on NQ, for example, it came down to the negative 100. It looks like it got close on ES and then bounced the negative 100. You put any credence to that usually in your setups?
Oh, the data candles, like fibbing a data candle.
Yeah, specifically the once you get below the zero, looking for a bounce at the negative 50, the negative 100.
Oh,
Especially since they love to do fake outs.
right. I've personally never used them that way. Although I will be
Okay.
test I would test it out. I haven't heard of that before. Maybe I just haven't listened to the stream when that's been happening. Because like usually what I do is because like usually what I would do is I would fib out like top to bottom like that, you know, and then create an ad zone around here and see if a play was like forming up in the ad zone, you know.
Makes sense.
Yeah. Do you have a screenshot to share of like what you mean?
Yeah, I actually do have I've got my Ninja Trader with the fibs. There are a lot of fibs here. Let me
So I'm all done with mine if you want to take screen share.
yeah, I could do that. Let me change my there we go. Okay, yeah, I can share whenever you're ready.
All right, yeah, go for it.
Screen one. There we go. So this is the fib I was talking about. So here's the that CPI revision.
Hmm.
Um, and I fibbed that out. And coincidentally, the wick was, I mean, pretty high over the 161, but either way, it then came down to, yeah, highlight it so it pulls it up or to jiggle it so it's, I know, yeah. So then it came down to just around the negative 100, which did that line up with, yeah, and that actually lined up with this BPR range. So I don't know really if it was the DPR and other things, or if that negative 100 has some credence or some power. I have the opacity on them really low because I don't know if they have too much of an effect, but I figured I'd include them.
I've actually
Um,
never even heard of those.
the negatives?
Yeah, yeah, I've never used them. So you do like a regular like fib retracement tool, and you can have negative extensions as well.
Yeah.
Oh,
Yeah, you can. So I actually can get the negatives here.
oh,
So we
look at
got the
that.
negative 50, 100, and 1.6. I think I'm gonna remove this one actually.
But for like a thing like this would be the way to test it is just have it up there and see what it lines up with. Because if it consistently lines up with BPRs or cool moving averages or other good like weekly levels and stuff, then then it would seem legit to me. Have you seen
Right.
it work out before?
Yeah, specifically on data candle. I've never had the confidence to go and catch it.
Right.
Um, but I've noticed that a lot of these data can like especially on like an FOMC where they swing it up
Hmm.
and then the first move is a trap and then they swing it back down and then oh that's a trap too and it comes right back down to the negative 100 retracement of that data candle.
Huh.
So I've noticed it, but really I should have some documentation to be making a claim about it. That's actually
Oh.
why I was asking.
Well, it's, I'll start looking at it because it's like with the thing like this, if it starts proving consistent to match up with certain stuff, it's not even something like, you would need to use it so you could get in at that very spot. You could just do it to identify support, like, identify
Yeah,
support, see if a high or low forms with some good indicators, and then, then you could maybe form, a notion of an entry off of you know, those circumstances lining up, I mean,
yeah.
having another tool to help confirm support, identify support, I mean, to me is always a good thing.
Right? Why not?
Yeah,
And
yeah.
then actually another fib I'll just share it since I've already got it up here. There was starting at 10:20, there was this what 1, 2, 3, 4, 7 5-minute candles with no pullback, all higher lows. And then eventually we got this pullback and it actually lined up directly with that CPI candle 261.
Mm-hmm.
So the top of the run up, and then that is something I tried out a little bit, the hidden fib. Um, and then it chopped that 100 for a little bit, hit the golden pocket of the algo run up, and then went right to the 161 of the algo run up. And then using the hidden fib, you can see it kind of went to the 50, pulled back to the actual 1618. I mean, I don't know how much credence to put into like the hidden fib system, but I watched some of Brandon's videos on it, and I really like the fibs.
Yeah.
Um, but yeah, so then it ran to the 161 of this 5-minute no pullback algo run up. And then gave a little hesitation, and then lastly popped into about the CPI candle, 5-minute candle 423. And then some hesitation there, but did not come back under the algo run up 161. And then lastly, the top of the day was actually the 2-2 daily candle 261.
Hmm.
So I feel like there's a lot of fib action today, which I feel like is kind of a given considering the fact that it's a Friday all-time high and we just grind it up all day. It's almost like a given that algos were controlling this day.
Yeah.
So that's why I've got like 3 fibs here. And I mean, today was just a real banger because I feel like they all played out pretty well, but I
Yeah.
guess it's pretty easy for a fib to play out well when all you're doing is looking for a pullback.
Yeah. Well, yeah, I mean, just keep putting them up and like keeping track of which ones work or which ones are easy to read, you know. Um, I like fibbing out the big daily candles. I like fibbing out the algos that you'll see in after hours pre-market on SPY and
Hmm.
Qs. Those make really good fibs. And
Yeah.
data moves make good fibs. Yeah, yeah, the deal. Just see which ones play out in that predictable way or reliable way.
Yeah.
Um,
Yeah,
100.
because the algos are the one causing those giant algo wicks. And if is for as long as the algos give a shit about Fibonacci's, I mean,
Yeah,
they will keep playing out. And then eventually maybe one day the algos will decide to not do that when the competition gets too great. Something I really fear in the market when like AI
right.
might make the competition too strong for the average competitor. Uh, but
Uh,
yeah, I'll keep using them. I'll
yeah,
update you on the negative 100 too. I feel like that one is one I will probably only use for these big algo candles.
yeah. Well, anytime that you see one of those finding support, yeah, take a screenshot and see, or if you see it like not finding support, yeah, just see how it works out.
Will do. Yeah, and then pull over the cues. That is that right there. So near the top of the day was the 261 of the you probably have already if anyone here looks at Brandon's fibs or in the Brandon chat room, you probably already saw this, but that was actually a fib from 2-2 when that made an all-time high on the cues.
Oh, the 2-2 all-time high candle.
Yep.
Yeah,
And then that
I've been using that one.
261,
Yeah, yeah, that's what I
you've
mean.
been using that?
That was a great candle. I've been using that one. Yeah,
Yeah, it was definitely a nice candle. I mean, once it got above the 100, it did not come below the 100. I mean, you can see right on this one, it just touched the 100 and then that was it. Did not come below it at all.
yeah, yeah.
So,
Yeah, I wasn't looking at cues, but the that same day candle from SPY, I used those levels on trades. During this week. Really reliable levels.
yeah. Yeah, they're pretty awesome. You can come to hate the algorithms, but you can come to love them when they're understandable.
Yeah, absolutely. Just it's like what we're doing here with Semper, finding what setup works for you and being able to apply it where it applies, to scope, if it's setting up correctly in whatever whatever type of market is being presented to us, not trying to force it in there,
Right.
Yeah, yeah. Usually when you try to force stuff is when shit goes against you.
Yeah, yeah. Like if you see like a little something that looks like a little snapshot of your setup, don't take it for granted. Zoom out, get the bigger picture, and see if what you're seeing really is a plus. It's like
Hmm.
you know, some things aren't what they appear to be. Like a used car can have a really snazzy paint job and be like, yeah, I'm getting that car, but then it could be a bad idea because the motor might be shot. But at a
Yeah,
glance, it looked like the real deal.
yeah,
You gotta
definitely.
investigate it more. You know, but that's what we're doing here.
Yep. Yeah, so that was the only thing I had. I really got to get better at journaling my exact stuff. Let go of the bias of, well, I learned it because I did it. Um, so I journal a lot of them paper, but a lot of what I actually be careful to journal every day is mostly my emotions, which arguably is more important, or maybe not more, but just as important. So
Oh,
that's often what I end up journaling is like, remember, never revenge trade. Or one
yeah,
of the biggest things, if I ever do double down on a second support, to always scale out heavy at break even.
right.
Um, Stuff like that is what I make sure to journal every day. But I think I mentioned in one of our previous meetings, I got to get better at actually journaling the specific trades and the setups to refine my system.
Yeah, absolutely. Because like, that's the thing that we need to be diligent about is focusing on that stuff. And the more we learn it in our minds, like the easier it's going to be to focus on it in the moment. Because because we'll have that data more hard coded into our minds and our eyes, and and in our the way we're judging this stuff.
Yeah.
Journaling really helps. And I started using OneNote too because Dell's been using OneNote, and I'm like, man, that looks pretty cool. So I set up OneNote for
Well, not
myself.
only that, but that window allows you to take a screenshot either of a red trade, so you burn that image. It helps you burn that image into your head where you're not doing it again, repeating the same. You know how the saying goes: if you don't know the past, then you're more likely to repeat it,
Hmm.
or something like that. Um,
Hmm.
probably butchered that, but you know what I mean. Where you want to be able to. I know that journaling in the journal helps, but if you can journal on a digital platform where you could take a screenshot, add that to your journal, and be able to jot down your notes before, like how you felt during the trade, or even before the trade and how it played out, and then if it's a red trade, what are you going to do to fix it? What are you going to do next time? What are you going to do? What are you going to look for next time to fix
Hmm.
what you messed up on that red trade? So you can always
Hmm.
reflect a little better because you have a screenshot, and you want to get a screenshot of the whole play, right? Where you got stopped out, did it hit your target? Did it miss your target? Or did it shake you out? Stuff like that. And that picture is gonna provide that information for you to help
Yeah.
you make that correction a little better.
Yeah. Definitely.
Yeah, they're good, man. And then once those plays become consistent, those screenshots start looking very similar to one another. That's a really good feeling. Um, yeah. And I have I don't know, it's this has been an awesome meeting. I should probably split and get ready for my next thing. Does anybody have anything else that they want to share or add before we maybe end the
I'm good, but if anybody has any questions, go ahead and shoot them. I'll try to answer them the best I can.
Oh, permanent waves. Just
Oh,
one note. I opened up the chat here. I don't know, permanent waves trading in the zone. Yeah, I skimmed through that before and I love it, and I'm actually rereading it now.
yeah, it's
Thanks
super
for putting
fun.
that comment in.
And also
Yeah.
check out the description of the book that I put in the futures chat. Because it's a thing about mindfulness during while trading, and it's goes over a lot of the cognitive biases that we go through as traders, and so it's good. I just started the book, and I'm already like it's clarifying a lot. Yeah,
I'll check that out.
and like Permanent Wave says, yeah, trading in the zone is absolutely essential reading, absolutely essential. Um, yeah. All right. Well, cool, everybody. I guess I'll stop the recording there.